to reinforce the compression of term premia as well as to inject liquidity, which drew a favorable market response. These were clear signals that the Reserve Bank will support the market with adequate liquidity through the various instruments in its toolkit. The liquidity impact of OMOs could be gauged from the fact that we made net outright purchases amounting to rupees 3.13 lakh crore during 2020-21. For the year 21-22, drawing on experience, we have decided to put in place what is termed as a secondary market GSEC acquisition program. I repeat, a secondary market GSEC acquisition program, or GSAP 1.0, to give it a distinct character. Under the program, the Reserve Bank will commit upfront to a specific amount of open market purchases of government securities with a view to enabling a stable and orderly evolution of the yield curve amidst comfortable liquidity conditions. The endeavor will be to ensure congenial financial conditions for the recovery to gain traction. For Q1 of 21-22, therefore, it has been decided to announce a GSAP of rupees 1 lakh crore. The first purchase of government securities for an aggregate amount of rupees 25,000 crore under GSAP 1.0 will be conducted on April 15, 2021. The positive externalities of GSAP 1.0 operations need to be seen in the context of those segments of the financial markets that rely on GSEC yield curve as a pricing benchmark. In addition, the extension of held to maturity dispensation opens up space for investments of more than rupees 4 lakh crore. We will also continue to deploy our regular operations under the LAF, longer term repo, reverse repo auctions, forex operations and open market operations, including special OMOs, to ensure liquidity conditions evolve in consonance with the stance of the monetary policy and financial conditions are supportive of all stakeholders. While laying out the liquidity management strategy for 21-22, let me unequivocally state that the Reserve Bank's endeavor is to ensure orderly evolution of the yield curve, governed by fundamentals as distinct from any specific level thereof. Our objective is to eschew volatility in the GSEC market in view of its central role in the pricing of other financial market instruments across the term structure and issuers, both in the public and private sectors. This is a necessary prerequisite for nascent and hesitant recovery to firm up and become more durable. Needless to add, two-way movements in bond yields consistent with the fundamentals are quite normal from a market perspective. However, such movements should not be abrupt and disruptive if financial stability has to be preserved. The Reserve Bank will of course continue to do whatever it takes to preserve financial stability and to insulate domestic financial markets from global spillovers and the consequent volatility. I would urge market participants to take heed of our actions, communication and signals in a balanced manner. Together, we can overcome the challenges and lay the foundations for a durable recovery beyond the pandemic. Let us prepare for our tryst with our potential firmly. Let me now announce some additional measures. Against this backdrop and with a view to nurture the recovery, certain additional measures are being announced. The details of the measures are set out in the Statement on Developmental and Regulatory Policies, which is the Part B of the Monetary Policy Statement. As you would have noticed over the last 1 year or so, the announcements made under Part B of the MPC Statement, which are outside the remit of the Monetary Policy Committee, have had to deal with the challenges emerging from the pandemic. We have also been able to undertake certain major reform measures and certain major policy. We have also announced certain policy decisions which have facilitated the creation of a better ecosystem for our economy to function, not only in the context of the pandemic, but even otherwise. The announcements are as follows. The first announcement relates to TLTRO on-tap scheme extension of deadline. With a view to increasing the focus of liquidity measures on revival of activity in specific sectors, the TLTRO on-tap scheme announced on October 9, 2020, which was made available up to March 31st, 2021, is now being further extended by a period of 6 months, that is up to September 30, 2021. Next announcement relates to liquidity facility for all India financial institutions. Special refinance facilities of rupees 75,000 crore were provided to all India financial institutions like NABARD, SIDBI, NHB and Exim Bank during April to August 2020. To nurture the still nascent growth impulses, it is felt necessary to support continued flow of credit to the real economy. Accordingly, liquidity support of rupees 50,000 crores for fresh lending during 2021 will be provided to all India financial institutions, and this will consist of rupees 25,000 crore to NABARD, rupees 10,000 crore to National Housing Bank, and rupees 15,000 crore to SIDBI. The next announcement relates to enhancement of limit of maximum balance for payment banks. With a view to furthering the financial inclusion and to expand the ability of payment banks to cater to the growing needs of their customers, the current limit on maximum end-of-day balance of rupees 1 lakh per individual customer is being increased to rupees 2 lakh with immediate effect. Next announcement relates to ARCs, asset reconstruction companies. Asset reconstruction companies, that is ARCs, play an important role in the resolution of stressed assets. Their potential, however, is yet to be fully realized. It is therefore proposed to constitute a committee to undertake a comprehensive review of the working of ARCs and recommend measures to enable these entities to meet the growing requirements of the financial sector. Next relates to permitting banks to on-lend through NBFCs. Recognizing the key role played by NBFCs in making credit available to the last mile, bank lending to registered NBFCs other than MFIs for on-lending to agriculture, MSME and housing was permitted to be classified as priority sector lending. This dispensation, which was available from 13th August 2019 till March 31, 2021, is being further extended for another 6 months up to September 30, 2021. Next announcement relates to enhancement of loan limit against negotiable warehouse receipts. With a view to encouraging farm credit to individual farmers against pledge hypothecation of agricultural produce, it has been decided to enhance the loan limit under priority sector lending from rupees 50 lakh to rupees 75 lakh per borrower against pledge or hypothecation of agricultural produce backed by negotiable warehouse receipts as well as electronic negotiable warehouse receipts issued by warehouses registered with the Warehousing Development and Regulatory Authority. For other warehouse receipts, the loan limit for classification under PSL will continue to be rupees 50 lakh per borrower. Financial Inclusion Index. Financial inclusion has been a thrust area for the government, the Reserve Bank and other regulators, with significant progress made under this approach over the years. To measure the extent of financial inclusion in the country, the Reserve Bank proposes to construct and publish a Financial Inclusion Index, FI index, based on multiple parameters. This will be published in July every year for the financial year ending previous March. Next, I turn to centralized payment systems, that is we are extending the facility, membership under centralized payment systems, that is RTGS and NEFT, to entities other than banks. Let me elaborate. Membership to the RBI operated centralized payment systems, that is RTGS and NEFT, is currently limited to banks with a few exceptions. It is now proposed to enable non-bank payment system operators like prepaid payment instruments, that is PPI issuers, card networks, white label ATM operators, and trades platforms regulated by the Reserve Bank to take direct membership in RTGS and NEFT. This facility is expected to minimize settlement risk in the financial system and enhance the reach of digital financial services to all user segments. We are also announcing interoperability of PPIs and increase in the account limit to 2 lakhs. Let me elaborate. The Reserve Bank had issued guidelines in October 2018 for adoption of interoperability on voluntary basis for full KYC prepaid payment instruments. As migration towards interoperability has not been significant, it is now proposed to make interoperability mandatory for full KYC PPIs and for all payment acceptance infrastructure. To incentivize migration of PPIs to full KYC, it is proposed to increase the current outstanding balance in such PPIs from rupees 1 lakh to rupees 2 lakh. Detailed circular on this will be issued separately, and we will provide adequate time for the entire process of transition to happen. Next, cash withdrawal from full KYC PPIs issued by non-banks. At present, cash withdrawal is allowed only for full KYC prepayment instruments, prepaid payment instruments, that is PPIs issued by banks. As a confidence boosting measure and to bring uniformity across PPI issuers, it is now proposed to allow cash withdrawals for full KYC PPIs of non-bank PPI users. This measure, in conjunction with the mandate for interoperability, will boost migration to full KYC PPIs and would also complement the acceptance infrastructure in Tier 2 to Tier 3 to Tier 6 centers. Now, these announcements which I have made relating to the PPI, interoperability, etc., they are going to make significant contribution to our payment and settlement systems. They will also promote financial inclusion, and they will also enhance the reach of digital payments across the country. Next announcement relates to external commercial borrowings. Under the external commercial borrowing, that is ECB framework, borrowers are allowed to place with AD Category 1 banks in India for a maximum period of 12 months. In view of the difficulty faced by borrowers due to the COVID-19 pandemic, it has been decided to permit parking of unutilized ECB proceeds drawn down on or before March 1st, 2020 in term deposits with AD Category 1 banks in India prospectively up to 1st March 2022. And finally, one more announcement that relates to Ways and Means advance limit for states and UTs. We have decided to accept the recommendations of an advisory committee constituted by the Reserve Bank to review the Ways and Means advances limits for states and UT governments and other related issues. Accordingly, it has been decided to enhance the aggregate Ways and Means advance limit for all states and UTs to rupees 47,010 crore, which is an increase of about 46% from the current limit of rupees 32,225 crores, which was fixed in February 2016. Further, it has also been decided to continue the enhanced interim Ways and Means advance limit of rupees 51,560 crore granted by the RBI due to the pandemic for a further period of 6 months, that is up to September 30, 2021. Let me now try and conclude my statement. In contrast to the previous year, the hope generated by vaccination drives in several countries at the start of 2021 has been somewhat offset by rising infections and new mutant strains worldwide. Yet, the speed and collective endeavor with which the world mobilized scientific energies to develop vaccines and pandemic related protocols that have now become a way of life give us hope and confidence that we will sail through this renewed second or third surge. Localized spurts in rates of infections will hopefully ebb in COVID 19 as the COVID 19 vaccination progresses. I truly believe in the indomitable spirit of human race which confronted the trial by virus during 2020 with resilience and fortitude and the will to survive. Let 2021 be the harbinger of a new economic era for India. I conclude by a quote from Mahatma Gandhi, who continues to inspire us, and I quote, "If patience is worth anything, it must endure to the end of time, and a living faith will last in the midst of the blackest storm." Thank you, stay safe, stay well, namaskar.